So now we're talking about lesson number 2. Are you moving average? So when you come to Google or the search bar, just go to stockcharts.com. Once you come to stockcharts.com, you'll see in the middle of the screen, enter symbol or company name. I'll type Apple. Okay. Now that we've done that, we want to zoom in. So let's explain what we see on the screen. Anytime that you see the red candlesticks, people were selling the stock if they own it, or if they trade options, they were buying puts. So here's what the bears look like in the market. They're selling or they're buying puts. They want it to go down either way. If you own the stock, you sell it. If you trade options, you buy puts. Both causes the stock to go down. The white represents bulls, opposite from bear. Bulls buy calls, or if you own the stock, you buy it outright in shares. So when enough bulls purchase calls and buy the stock, it drives the price up. So all the white candlesticks are moving up. When you see the black, it means that the stock price wasn't really moving, or what we call range bound. Okay. So now that we know what the colors mean in the graph, let's ignore these lines for the time being and talk about this in the corner. MA50, 112.30. MA, the acronym is moving average. 50 is how many days it represents. 112.30 is the moving average price today. So if you look at the stock price for Apple for the past 50 days and you average it by 50, you'll get 112.30. And that's what this number represents. This is a short-term moving average because 50 is less than 200. Okay? And you see it go here. The next one is moving average 200 day. Same notion for the 50. Take the last 200 day stock prices, divided by 200, you'll get 102.82. The long-term moving average for Apple has been sloping down. But since the short term has been sloping up, you see that reflected in the long term right about here. And just to illustrate that, you see this clearly going down, but since short term is doing really well, you see the long term level out about right here. And then it looks like it's starting to gain momentum forward. Okay? So that's what the short term and long term moving averages mean. Keep in mind that although we have the stock prices next to it for the short and the long term, we also have this. This is the current stock price. If the current stock price is above the short and the long term, it means currently the stock is doing better than it was short term and long term. It's a bull signal. Doesn't mean to buy or sell it. It's just a bullish signal. Conversely, if the stock price is below these two numbers, it's a bear signal. That would mean the stock price is currently underperforming the short and the long term. Okay, so this would be bearish if it was down here. So to wrap it up, short-term moving average is 50 days. This is the price. If you take the 50 days and you average it out, we should be about here. For the 200 day, if you take that, average it out, we should be about here. Since this is where we are currently, it looks like we may continue to go down, or who knows? It's just a signal. Now, since we got past that, let me clear this. Now let's talk about something that will really help you trade. It's called Bollinger Bands. So if we scroll down, we see an option to hit Overlays, Bollinger Bands, Update, and let's talk about Bollinger Bands. Bollinger, you can Google him. He developed this notion. If you look carefully, you'll see dotted lines in the middle of these two solid green lines, like a street, if you will. This solid green line on the top is developed by taking the standard deviation and adding 1, okay? So of this line, it takes the standard deviation plus 1 to get this. The standard deviation minus 1 is how you get this bottom line. If that confused you, you may have to Google it. All it means is that this is the street width of what we're driving, okay? Here's why it's important. You see up here how that candlestick is popping above the street line? When it's above the street, it means it's overbought. This means too many people have purchased it and that it needs to come down eventually because it's poking out of the street, okay? Or outside of the +1 standard deviation. Look what happens after too many people have bought it or overbought. It falls, and then it becomes oversold, where too many people have sold it and the cycle continues and yet defines this a trend again for the street. Okay? Complex notion, but very useful. Just to re-illustrate, this is another green solid line on the outside of the street. You see right here, it's coming outside of it. It's oversold, so then it popped back up. Okay? So Bollinger Bands are a great tool to help you. Not a definitive sign to purchase, but a signal. Now, let me remove the Bollinger Bands. None. Update. Okay, so let's talk about signals on one more. This is called the golden cross. A golden cross forms when the short term cuts through the long term. Notice how the blue, what we're doing most recently, is cutting through the red, long term. When this happens, look what happens shortly after. It pops. Okay? It doesn't mean that you should buy or sell it. It means that if you want to take low risk based on a statistical assertion, you should do it. You should hold it for a couple months at least. Look how long it takes to pop. It took 19 days there and another 10 days or so there. So watch this. I'm going to come back. We're on Apple. I'm going to change this to Twitter, TWTR, and hit update. This is for Twitter. Look at the drawing. It's still in place. We're going to just zoom in, and it's the same thing. It pops, and it takes a couple months. Okay? Keep in mind, this is both the tech sector, but yet still statistical analysis. So, having said that, stockcharts.com, definitely a useful tool.